In Agribusiness Today, we're discussing the current status of milk production, and without a recent USDA report, it's hard to predict for sure what's out there. Al Pell picks up the conversation with Naomi Bloom of Stewart Peterson.
Let's talk a little bit about milk prices, because the government doesn't report, and a lot of the people who look at milk look at all those prices. There are a lot of reports out there. It's not available now.
Right. The reports haven't been available for a while, and so we're really focused on the different types of cash markets available in terms of the cheese price, the butter price, the whey price. And right now for milk production, the actual U.S. milk production is the highest it's been on record. And we've had strong export markets. Exports have been up 13% overall for the past year on all of the different types of milk products.
Now, those exports were up because New Zealand wasn't producing very well. They're coming back in, though.
They are. Their production is going to be up over 4%. And when you talk percentage in milk, it's a big number, and the market really is in tune with it. And so now global milk production is going to be up over 1% globally. So we have a lot of supply, and thankfully the demand is strong, primarily with the milk and the dry milk powder going to China. And then our cheese market, our exports are going into Mexico and Saudi Arabia, South Korea. So the demand is there, and we're looking like we're going to see milk prices on the Class 3 futures be able to get up towards $19. So that is kind of a target number that we want producers to really keep in mind and hone in, and when they see that, or if it gets close to it, do your best to lock it in either with cash or some sort of a futures or option strategy, because for most guys that's at least $1 profit. That break even on milk is not $10 anymore, it's up to $17 and $18 for most guys. So we're looking at a price point to be profitable, but with all of that supply out there globally, we want to make sure that we're locking in profits when we can, because there's a lot of supply.
From a milk producer standpoint, there are two things you need to worry about. One is your price on terms of selling your product, and if you can get $19 or better, you might lock in some. The other side of it is, with those low feed prices, you might be able to lock in some of that too.
Yes, very good point, especially with the corn prices. The meal prices we're hoping can come down a little bit more, but especially on the corn side, lock it in.
Okay, thank you very much. Naomi Bloom has been our guest here on Ag Day. We'll be back tomorrow in a moment.
To discuss marketing strategies, call 800-334-9779 or visit stewartpeterson.com. Enter for a chance to win a trip to the ACMAs from Case IH and Farm Journal Media at agweb.com/ACMA_giveaway.